Hey everybody, so I just wanted to go over the adjusted trial balance and how we will use the adjusted trial balance to create our financial statements. So we've already learned about a trial balance, and now we're going to actually, now that we've learned how to do adjustments, we're going to start calling the trial balance we learned about before the unadjusted trial balance, because it's the trial balance before adjustments, okay? And so a lot of times in the accounting cycle, what we'll do is we'll record all of our entries for the month, and then we'll create an unadjusted trial balance. Then we'll do our adjustments, and then from that, we'll create an adjusted trial balance. And then we can use that adjusted trial balance to create all our financial statements. I say a lot of times in accounting, we do this, but not really. And the reason I say not really is right now, I don't have to create trial balances by hand. Okay, my computer will do that for me. So no matter what accounting software I'm using, as I record my transactions, I can at any time just click run reports and have it create a trial balance. And so I don't typically create a trial balance, then enter my adjustments, and then create another trial balance. In fact, I very rarely use trial balances because once I've entered my adjustments, I can just say run report and create income statement and balance sheet and statement of cash flows and so forth. Anyway, but we still need to understand the process because a lot of times the accountant is the one who has to kind of look at what's happening on these reports and notice what's wrong and be able to go back into the journal entries and correct them. Okay, so understanding the process makes it so that we can make corrections when we need to, or that when someone's questioning the source of information, we can go into the system and find it. That's a lot of what accountants do, well, at least as it relates to entries and things like that. Accountants do a lot of other stuff too. Anyway, so this is how we make an adjusted trial balance. You'll see in the yellow on the left, we have the account titles and then the unadjusted balances of each of those accounts at the end of the financial period. This is December 31st, 2019. The next two columns represent the adjustments. And so we did all of our adjusting entries, and we did debits to some accounts and credits to other accounts. And there they are. And so we can see all of those adjustments. And then the last two columns represent the adjusted trial balance. And all we do to get the adjusted trial balance is record those adjustments. So you can see like our cash before adjustment had a debit balance of $4,275. And then there were no adjustments to cash. So the adjusted trial balance for cash will still be a debit of $4,275. Our accounts receivable, though, had zero as its balance before adjustments. And then there was a debit balance of $1,800. So now the new balance is a debit balance of $1,800. Supplies is a little different, right? It had a debit balance of $9,720, and then a credit adjustment. And so that credit adjustment is actually going to reduce the balance of the account. And so if we had a debit balance of $9,720, subtract the credit adjustment of $1,050 gives us a new adjusted trial balance of $8,670. And we can walk right down the list. I'm not going to explain each one, but it's the same thing. So if you have a debit balance and a debit adjustment, you'll add them to find the adjusted balance. If you had a debit balance and a credit adjustment, you would subtract them because that credit is reducing that debit balance. If you had a credit balance and a credit adjustment, you would add them to find the new adjusted balance. And if you had a credit balance and a debit adjustment, then you would subtract them. So like, for example, unearned consulting revenue had a credit balance of $3,000, a debit adjustment of $250, giving us a adjusted trial balance of a credit of $2,750. So there's our adjusted trial balance. And once we have that, now we're in good position to create our financial statements. Because look, all the assets are listed together from cash all the way down to equipment and the accumulated depreciation on the equipment. There's our asset accounts. So that will help us with our balance sheet. Below that, from accounts payable down to unearned consulting revenue, those are our liability accounts. And so that will also help us with our balance sheet. And then from C. Taylor Capital down to C. Taylor withdrawals. Those are our equity accounts. Then you can see we have a revenue account, 2 revenue accounts, consulting and rental, and then expense accounts. So we have all the information we need. Remember, when we make our financial statements, the first one we'll do is the income statement. So we'll do our revenues minus our expenses. And then we'll do our statement of owner's equity, which will have the information off of our trial balance in the investments, plus the net income, which came off of our income statement, minus the withdrawals, which again, we got from our adjusted trial balance, gives us our new capital at the end of the month. Once we've done the statement of owner's equity, we can create our balance sheet, and again, our assets and our liabilities and our equity, our assets and liabilities, we're going to put from our adjusted trial balance, and our equity will pull from our statement of owner's equity. And there you go. So once you have completed your adjusted trial balance, making the financial statements is pretty easy. It's nice to have it all together in one place. And back when they did it by hand, that was certainly an important part of it. It's also nice to double check and make sure all your debits and credits balance, and that trial balance has accurate balances for each of the accounts. And then you can make those financial statements. So I hope that's helpful to you, and I hope you have a great day.